Well, good morning, Bob.
Good morning, Bill.
Today is the first, I guess, Monday that we've been on the air in summer.
That's right. Summer just started this past week.
Exactly.
Right.
It's hot. It's hot all over the country. I was in Denver last week. It was 102 degrees.
Wow.
And you know,
serves you right for going to Denver.
Listen, the heat is sizzling, but the markets are not.
That's true. And Bernanke was out this week saying, you know, we're going to extend the Operation Twist until the end of the year.
Free money.
Free money.
Or cheap money. Cheap money.
And they're going to move about $267 billion from long-term into short-term securities.
I can't even count that high.
Well, you just have to work at it.
It's a big number. It's a big number. Well, let's talk about, look, really some amazing things going on in Europe. All of a sudden, the Bund, the German equivalent of Treasury securities, is like no longer a safe haven. Amazing.
Well, I mean, people are starting to worry, you know, that maybe Germany is going to have to kick in some money and
bail out the rest of the
bail
world.
out the rest
or
of
at least the rest of Europe.
The big difference in Europe and in the U.S., you know, if you look at some of the countries that are having some of the problems, like Greece and Spain and
Portugal,
Ireland,
Italy.
and Portugal, their deficits are no worse than some of the states in the U.S.
Well, what's the problem then in Europe? What's the real problem in Europe?
Because in the U.S., we have a central bank and we have transfer payments. Right now, Florida used to be a great economy. The transfer payments from the rest of the country into Florida right now are enormous.
We need to go to Florida, don't we?
Yeah,
Get some money.
Mississippi
Get some
also
money.
is getting a
Get some
whole
money.
bunch of money from the rest
I've
of
been
the
looking for it, but I hadn't seen it.
Well, it's not coming to us, but it's coming to a lot of folks in the state. So the actual transfers are huge. Now, in Europe, those transfers aren't occurring because they don't have a central bank.
They've sort of got it. It's just sort of got it.
Well, it's not the same kind of thing. And so they don't have a central government in the same way. And so Germany and some of the other stronger countries are going to have to step up and say, well, we're going to voluntarily transfer that money.
And that goes over well with the German taxpayer, I'm sure.
Oh, yeah. Well, it probably, I mean, in this country, people do it all the time. I mean, people in the states that are doing reasonably well are transferring money to the states that are doing poor.
And that's been the case for many, many years.
Right, yeah. Texas, during the S&L bailout, was a huge recipient of funds.
But yet that turned, and in the most recent crisis, Texas has been running a big surplus.
Well, it's been doing much better than other places, absolutely. A lot of news. I mean,
so let's back up and talk about people being underwater on their mortgages, all right? Because we're talking about deficits. Let's talk about being underwater on your mortgage. A good case of the shorts.
Well, you know, it's a real problem right now for people with jumbo mortgages because even if they are paying their mortgages, they've got excellent credit.
Rates have come way down.
Rates have come way down, but they can't refi.
Because they're underwater.
They're underwater, and the banks won't refi. You know, even though they have great credit and it would help them economically to refi, the banks won't let them.
Would that put you in a sour attitude?
I think it would. And so what they have to do is they have to go into their savings account and pay $100,000 or $200,000 or $300,000 to get their mortgage down to where it is not underwater anymore, and then they can refi.
What if you don't have $100,000 or $200,000, $300,000 savings account?
You don't have
That's a problem.
Then you're in trouble.
I have to do the transfer papers. All right, we did that. So talk about some of this eminent domain stuff. We've been reading about some of this eminent domain, about the local governments coming in and actually condemning these properties for the purpose, basically, of writing down the mortgage.
Not condemning the properties, but using eminent domain to take over the mortgages.
Right, condemning but basically it's a form of condemnation.
In a way, yeah. Robert Schiller wrote a article in the New York Times. I know you don't read the New York Times, but
it hasn't gotten, the Sunday's paper hasn't gotten here yet. Okay, it's coming.
All right. Anyway, he wrote an article in the weekend New York Times talking about the fact that this is a public goods problem.
I actually like the Times. There's smaller words in the Wall Street Journal.
Yeah, all right. Anyway, and it's the prisoner's dilemma. If every lender in the country collectively were to write down all of the mortgages that were underwater, and do that, then then the whole mortgage industry would be in good shape.
But I want you to write yours down. I don't want to write mine down.
That's always the case. That's the prisoner's dilemma.
Exactly.
Everybody was saying, well, it'd be really good if all the other banks would write theirs down, but I don't want to write mine down because then the market's good and I get all full payment, right? And so what he's saying is the local governments, to solve this problem, could go in and use eminent domain, just like they do when they're taking over properties for a highway or a street of some sort, and just say, okay, we're going to take all these mortgages, we're going to sell them, or we're going to pay the investors at the current market rate for those mortgages.
We have to decide on what that is.
Well, there's there are formulas, and basically make them take the write down just like that.
But we all have to take it, although it really has a disproportionate impact.
Exactly, and that's always the problem with those types of things. It's just like when you run a road down through there, and you use eminent domain to take over the property of those people. Is that fair? Well,
fair is where you get cotton candy.
But
the question is it equitable?
Is it equitable? Well, you're getting compensated, but maybe not as much as you want.
And people get compensated. They get different benefits and different compensation based on where you're located.
Exactly.
So at the end of this discussion, do you think it will occur?
I think it will occur some places. I think Riverside, for example, Sacramento area, other areas in California are already talking about doing this, and they may do it in others. However, if you look at some of the markets, they're going in opposite direction. There was an article this week about Phoenix, and the fact that they can't hire enough construction workers for the boom in the residential construction. Phoenix, which was one of the worst hit,
absolutely worst.
And now they can't.
We're waiting on Vegas.
New construction is just going crazy. They're can't get enough houses out there, so things change.
That has not happened, of course, in Las Vegas as of yet.
Hasn't happened in Las Vegas. Certainly hasn't happened in Riverside. Sacramento, those areas, they're still depressed. They've got a lot of housing stock. However, that's the other thing is that the inventory of listings, the inventory of housing stock in a lot of the country is going down every month.
Which for sellers, that's good.
Right, prices are starting to creep back up. So now Schiller says we can't wait around for the market to recover on its own. The local governments have to go in there and just take over those mortgages, clean them up, turn everything around, and let's go. And it would certainly help things happen faster. There's no doubt about that.
The question is, will there be lots of lawsuits? I'm sure there will.
I would share. I mean, of course. How would you feel? If you're the lender, you've invested in all of those, and you think that you're managing them great, and some little city goes in there and tells you they're going to buy them all from you, and what did you say?
Well, the market cure normally is this. In other words, which will be faster as we work this through the court system? Will the market cure prior to that?
That's a good question. The court systems are pretty slow, but not everybody's going to be taken to court. So, some communities it would happen fast that way. So,
one last topic this morning,
all right,
and that is what's going to happen to the yields on the 10-year, because we're seeing a flight to that, maybe as the sole safe haven with the bund.
There's been a lot of talk about that last week. They keep thinking 10-year the rate can't go any lower.
It can go to zero. It can theoretically go negative.
I know, but it keeps creeping down, and mortgage rates every week it seems like we've hit a new bottom.
You're playing limbo,
and so it just goes on down. It's extraordinary, and you're absolutely right that because of that uncertainty in Europe, there's a lot of money that's shifting over here, buying those T-bills.
So what's the number? How low does it go?
Well, it's going to be above zero.
You think so? Actually, in some cases, it's been negative. People have actually paid to be in a safe haven. It's amazing.
In terms of real terms.
Yeah, it's amazing.
Right, yeah, absolutely.
But in nominal terms, it's theoretically zero.
Exactly. And so, who knows? I mean, it's hard for me. It was hard. It's still hard for me to believe that it went below 1.5.
Will it hit 1.25?
Very well might. I mean,
is that an economist yes?
That's an economist equivocation.
Well, this is FNC's Morning View. I'm Bill Rayburn with Bob Dorsey. We hope you all have a fantastic start to your summer.